guys can distinguish between a market shift and price continuation. So yeah, the main concept here we're going to be discussing is lower lows, lower highs versus higher highs and higher lows. So we're gonna just hide the chart real quick so I can explain that. So what is a higher high and higher low? So let's just have a look at made up PA I'm just gonna come up with. So I'm gonna have this. Sorry, I'll readjust this now. There. So let's say this is our price action. So as you can tell on the first half of the screen, we're going to split this chart in half, right? Sorry, wrong button, typo there. First half of the screen, we're in an uptrend, whereas in the second half of the screen, we're in a downtrend. And essentially, you can call all these points names. So let's say this was the high. It has to start somewhere. So this will be called our lower high. We'll call it LH. This will be called our higher high. This will be called, again, our lower high. And then I'm going to see if I can just duplicate these to higher high. And this again be a lower high, right? Now where the shift occurs is here. And why? Because we created what is called a lower high. Then we created a lower low. And so the pattern reoccurs as the same on the other side, except repeated with lower instead of higher. And essentially the idea is, if price is unable to break the previous high, or if price only moves down, if price moves down above the previous low, well then you're in an uptrend. And until the price fails to break the previous high or move as high as the previous high, well then you know you're in a downtrend. So your confirmation area is when that was your confirmation there. That was your alarm bells that price could be reversing here, and if you're in the opposite direction, it's a big red flag for you to get out, right? And it's a really simple concept. It works unbelievably well in FX. I'm going to show you how you could have used it in the euro dollar the past like a couple of weeks, and you would have made an insane profit, almost 360 pips, if you, which is 3.5%, which is nuts on Forex, right? So now that you understand this concept of higher highs and lower highs, let's get into a real example. So unfortunately, all this has transferred over. Sorry, I'll just get rid of all this for you before we move on to the chart. So as I said, this is our chart here. This is the past couple of weeks. And this is when we had our trend change. This marked our top, right? Now, we're going to, where was the confirmation here? Well, hey, this was our high, this was our rough area in the zone, our rough zone area. And you will see we fully broke down and created a lower high here. That was when we broke this low. This was sort of a liquidity grab, if you ask me, more than anything. But here was when we fully moved below. And where was the lower high created? Well, look at it right there. This is the high. And we were unable to break it, and this was the low. So I'm just going to call these LH and LL. So this is our LH. This is our LL. LH. sorry, this would, I call it about here. This is our LH. So LL, this is a bit of an exception. It's a bit odd here, but this is definitely our LL, LH, LL, LH, LL. Now it gets interesting here. Look, LL, but now we have a HH, LH, HH. Now is this going to be again our LH, or LL, sorry, HL? I think I mixed that up earlier when I was saying this. Are we going to create another HH? You know? You see that sudden shift? That's the first time we've had this. Does this mark our bottom? So, let's have a look here then. We're in a range. This is our first breakout of the range. This is our HH. We move down. We move down a little. You can't call it anything yet because you don't know. You need to wait for the break. Oh, well look, this is our HH. Oh, this is higher up than this previous retracement. That's a HL. HH. HL. And so it goes on until you get to the top and you see a liquidity grab. See how simple it is. And do you know how much you would have earned? That's 250 pips. Oh god, I don't even think I have enough. I'll have to increase time frame. And this is going to be about 300 pips, I'll tell you now. We were doing it from there. And even if you look in the higher time frame, right? Sorry. That was a bit... Well, actually, we were charting it from here, weren't we? So yeah, that was 600. So another 450 pips. So together, that's almost about 700 pips. And look, even look here. Lower low. And this is our, higher low, higher high, higher low. And you know, it's everywhere. It's everywhere. Like we're gonna have to go on like weekly time frames here. Like, you know, you can't really trade this, but look, it's obvious where things, like, since the beginning of time. Higher highs, higher lows, higher highs, higher low, still a high. So now, look, this is a bit of a shift. This is a lower high. See, it's a bit odd here. Sure, it doesn't really work on the weekly, but you saw it on the other time frame. I hope that helped. Really simple concept, really effective.